Okay guys, a very quick weekly forecast session. Obviously a day late because it was bank holiday today to a certain degree in the UK due to the Queen's funeral. Obviously the market has still moved, even though there was no market trading today. Things have happened. So we may have back to normality tomorrow, or tomorrow may actually be a little bit of a dud day before the market picks up again after recuperating from the long weekend and today. So Tuesday now probably will become Monday, and then we'll see the market volume in flux from Wednesday, Thursday. That's just a presumption at the moment, so we'll see what happens. But just to kind of bring you down monthly, down to 15-minute top-down analysis on what I've kind of been looking at. So effectively, we had buys out of the COVID lows, all-time lows getting taken at this point here. We had a good buy out of approximately, I think it was 300 odd pips. So we came out of this zone. Yeah, 300 odd pips were kind of seen out of that zone. And we then obviously retraced back down. That wick rejection has now been taken, and all-time lows are now being reached on the monthly. So we're coming into the end of the month. We'd probably want to see a rejection out of here. However, what we can see is within this zone, we then kind of marked up demand at the bottom because the market has rejected out of this zone now, and supply at the top because it took these lows. When we then go down onto the weekly, we can see that COVID lows were respected. This wick rejection was taken at this point here. It was respected at this point. The market bought out of that, came back, broke the lows again, has now taken those lows and has continued to kind of reject down deeper. So we're kind of looking like we're in a bullish week. We've got a double bottom at the bottom here. But again, as per the initial assessment when we took the lows here, we took the lows here. We need to understand that when lows are taken, all-time lows are taken, even though you're left with a scenario of a somewhat double bottom, it does not mean that it will play like a retail double bottom. Because mitigated positions have been taken here, they've been closed out and the market has started to reject out. So yes, on the higher time frame you will see a double bottom pattern. However, on the lower time frame there is a very clear liquidity grab, mitigation of orders, closure of orders here, and then the reason for the market to buy out was the fact that these orders were closed out and taken, and then it bought out from this point here to the highs and then rejected back down. So again, it just all depends on how you view the market and also understand the dynamics of how the economy works and how institutions place their trades. So when we get down onto the daily, we can see lows were taken at this point here. The market obviously then rejected, bought out slightly, and has then come back down, taken lows again, and we are now sitting again at all-time lows. So whatever positions are left behind here in terms of the short interim move, possibly a buyer's trap, we're now at all-time lows. This may well be the move that kind of comes up and kind of takes us out of lows. But again, we will see what happens. Let's turn on some supply and demand zones to show you how they've been refined from the higher time frame down to the lower time frame. So again, we explained that we had highs and lows on the monthly. So let's go back there just to explain to you how what's been done. We've got highs and lows, so supply and demand. That supply and demand wick has been refined down then on the weekly and then down again on the daily. And it's been refined to this degree where when we get down to this level, we can see that now we are assuming this is protected lows where all-time lows were taken. The market then rejected down, did not break those lows. Those lows are protected, and then it bought out of that zone. So again, we've got a refined area of demand down here on the lower time frame. Currently sitting in an area of lower time frame supply. Then we've got supply here on the higher time frame, which is the daily. Why? Because this is the supply that then broke all-time lows, okay, and took the lows deeper, protected lows down here, which is why this is termed supply. Interim supply here, again, we'll see that on the lower time frame. Higher time frame supply up here on the daily, and then these are all zones we had marked up from before when we were looking for the market to test these lows and then buy out of that zone. Kiss supply at the top, rejected back down, and now has taken all-time lows and rejecting out of that, going bullish. We're hoping that that continues. So effectively, when we get down then onto the 4-hour, we can see how those zones have been refined again. And we can see demand has been refined from these protected lows down to this point here, because it has been tested down. 50% of the wick has been taken. The market bought aggressively out of that today. And then we kind of see it sitting in supply at the moment, where the market reversed down and rejected out of this bullish reversal and came back down to target 50% of that wick, bought out, and now we're sitting in supply. So the point here is, because we're sitting in supply, we want to see what the market decides to do as we head into tomorrow, whether the supply gets respected and we see a rejection down to possibly tap into demand and then buy out of this zone, leaving these lows protected, or whether it goes back up, tests the higher time frame supply here, and then sells down to then buy up. We obviously wouldn't want to see it continuing down because, again, the market's never been lower than this point. There really isn't a reason for it to go down lower. We've got a new prime minister. She's very much capitalist. She's very much economy focused. She's very much growth focused. So the economy should now be recovering on the basis that we have somebody in power who effectively is singing the right tune. When we get down and we start looking at our fibs, so now we can see where we kind of have 50% of a protection wick here. We are expecting these lows to be protected by. Hasn't been taken as yet. It could be a reason for the market to come down, buy into this zone, take that 50%, and then buy out of that zone. We're sitting in supply at the moment. Supply has been respected with 2 wicks. 50% of the lower time frame wick here on the 1 hour, I believe, is what has been marked up. So we want to see what happens with that. Again, there's other levels of supply further above us, but when we look at the higher time frame 4 hours and we refine them down, these are the levels that I see as key. Yes, there is also supply here. This wick is supply, but because of the volume not being great as it moves out of that zone, I didn't really term this as a great area of supply for reaction, because the market didn't aggressively move out of this zone. Again, when we get down onto the 1 hour, we can then see how those zones have been refined. We are looking again at supply up here, where we had wick rejections, and then the market aggressively sold down, took all-time lows, rejected down, and then reversed from that point. Supply was respected. We can see it's been tapped here on the 1 hour, but again, it's been retested here. So effectively, there may be an institutional seller sitting above this point, which will then obviously want to target that supply, or the one above, or the one above that, to then sell down, to then buy up. When we then get down onto marking our key levels, we can see how they beautifully correlate with our supply and demand zones. So we have daily POC from today, because obviously market has opened, sitting below us, demand below that. So we have reason for the market to reject down into this zone to buy up out of. We've got bearish imbalances where orders were placed to take those all-time lows, sitting above us in supply. So you've got a 66 bearish imbalance, we've got a 16 bearish imbalance, and we've got supply marked as our supply and demand zones. There is DPOC from the last week as well, sitting above that area. There's a lot of key levels with high volume spikes above us. We've got bearish imbalance and DPOC from the previous week there as well. And these are zones that we were kind of looking at tail end of last week, when the market was looking to kind of come and test the lows of COVID. We can see how it kind of kissed supply at the top here, this level here, and formed this supply, which can now be refined. I think I've kind of marked that on the 4 hour. No, I haven't. It's on the daily. Yeah, so the daily wick is what I've marked on that basis. But when we get down onto lower time frames, these zones can be refined down to the wick. However, I've left it as it is because there is obviously those large imbalances below us, which kind of will hold price. This is where the volume move pushed down, and we have a lot of orders going in. So that is the projection for this week. We're hoping that we kind of have a reversal bullish break of structure needs to occur here, so we kind of have change in character above this wick, possibly taking supply here and then down into demand, then buy up out of. So we'll see what happens. If we turn on our splash levels, we can see that there are some levels that also fall in line with our supply and demand zones. So within this zone here, taking the wick, that would cause change of character, and then interim supply here, which is also a large order that went in at this point, obviously, which was respected when the market reversed to this point here. So we will see what happens. There are a few news releases. I haven't actually looked myself what the fundamentals are for this week, but we will see tomorrow and see how the market plays out, and then see whether there's any trades to be had tomorrow into Thursday, Friday, and hopefully it is buys for the long term now, and it may be a possible scenario where we kind of try to hold a few of the trades that we now take for the long side upwards. Okay, I hope that makes sense. I hope it has been helpful. There's a lot of levels on here. You can take screenshots during the video. The Discord is still active as always. We are now solely concentrating on TVT 2.0 as our mentorship Discord. Maybe something that kind of goes until the end of the year, just depending upon how traction is with members and how members are finding things. We are currently still expending our personal time trying to help people become profitable, especially in the economic situation that we find ourselves in. It's important to kind of obviously give back to the community what we have managed to achieve ourselves. So that's one of the reasons that we kind of decided to do the subscription mentorship, to make it accessible and easy for people to obviously gain the knowledge, but obviously also not make it too expensive that you have to pay £1,000, £1,500, £2,500 to learn some knowledge. Our course is available for free. You can pick up everything you need to. 90% of our input and know-how and knowledge base is actually within the course content. There are things that get fed in on the mentorship that kind of are tweaked and added into our analysis, execution, strategy, market reading of profile and the like. And that's something that kind of develops over time dependent upon what we see in different market conditions. We openly share that with the members on the Discord. And I hope it has been beneficial for most. It's definitely something that, isn't easy, but it does definitely work. You have to look at the market in a number of ways in order to understand how you need to be trading. It's not clearly just using indicators and placing a trade for a buy when you come to a bullish imbalance or a bullish splash or an area of demand. You have to understand how the economics of the position that you are now looking to execute from work for institutions. What would they be looking for? What is the purpose of them placing that order? And why would they want to place that order? So you need to kind of put yourself in their boots before you execute an order to understand what it is that they want to achieve from it. And this is why we say that we do not predict, we react. And the setups that we have within the course and the strategy are very clearly reactionary setups. We don't predict anything, we wait for a confirmation and then we take the trade. And those trades, as you know, are very forensically and precisely executed. And if you continue to do that, then you will find yourself not only more patient in terms of taking trades, but also more profitable in the outcome and strike rate of your trades. Okay. Again, any questions, comments, please do drop likes, subscribe, share it with people. Feel free to continue contacting me and Seb on Instagram and YouTube. We are quite active on that basis. And that's where, we try to obviously give people that aren't in the mentorship some term of feedback, but obviously it's sporadic because we are concentrating more on the mentorship itself. Okay, trade safe, take care, speak to you guys next week. Bye.